Hey everyone, and welcome to Earnings Cheat Sheet for Friday, October 17th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, it's great to see you. We had a lot of financials reporting, but we've got a lot of big names coming up next week. So, what's on your radar?
Yeah, I want to take a look at Netflix, Tesla, and GE Vernova, an energy/AI play.
Everything's an AI play right now, Ed.
That's right. Everything basically is. You're right.
Well, how about we start with Netflix, which is scheduled to announce Q3 earnings on Tuesday, October 21st. Earnings for the streamer are projected to climb 29% to 696 per share, and revenue is seen rising 17% to $11.51 billion. And here's why we're watching Netflix. The key focus is on Netflix's ability to scale up its ad business. And that's one reason why the company has been increasing live events. And without subscriber figures, investors will be looking for other engagement figures such as hours watched. So, Ed, Netflix wants to become a $1 trillion market cap company, and that advertisement business is really key to that growth. Earlier this year, Patrick Seitz and I reported on Netflix's ad business targets, and analysts told me that they're still really in the early innings there. So, it seems like there's a lot of potential and room to grow there still.
Yeah, I mean, that's where you can get subscribers and advertisers. That's sort of where the growth is because they have such dominance in the US. That's one of the events. Everybody has it, it seems like. So that is definitely a growth area. Earnings growth is expected to slow down a little bit, but it still be really strong. I think revenue growth is supposed to pick up slightly. It's still just doing really well. It's also just so consistent in that regard. It just doesn't seem like anything is going to stop it. The streaming wars from 2 or 3 years ago are over. Everybody is licensing content to each other, which is just much cheaper for Netflix. Other streaming networks, they have stuff that doesn't do very well. Then they put it on Netflix, and it becomes a big hit again. So the payoff is great in that situation. Yeah, so just a really strong, consistent business.
Well, Netflix definitely emerging as the leader in those streaming wars. But let's see what the chart says, Ed. I'm here on the daily, and we can see Netflix in consolidation with a 1341.15 buy point, but it really seemed like it struggled to get momentum from this breakout here in April, Ed, and it retook the 21 and 50-day lines last week, but trading below those levels now. So what are you focused on here chart wise as Netflix heads into earnings?
Yeah, I was making some progress recently, and and when I moved above the 21-day line, heading into earnings, so that looked good. If you do a trend line from the top of the base, it was sort of crossing a trend line or teasing a trend line, depending on how you draw it, like in those days. And so it's like, okay, maybe, but earnings were coming up, and now it's backed off. So I think if it gets above last week's highs, you could do an entry, but that would be off of earnings. Our earnings tend to be really volatile. I mean, stock reaction tends to be big. There have been some big gains, but there are some big losses over the years. One issue is that everybody assumes that things will go well. So if there's any disappointment, it's like, what? We were so sure. I mean, if you can count on Netflix to deliver strong results, especially on the earnings side, and they disappoint or they disappoint with their guidance, you could see a big sell-off. That is definitely in its character. But that's what I would want to see. But I don't think you would do anything until earnings because of the big volatility there.
And of course, so tricky in the market right now as well. That in terms of fundamentals, Ed, strong EPS rating here, strong composite rating, but that accumulation distribution rating is at a D minus, meaning that doesn't seem like there's a lot of institutional investors buying anything else with the fundamentals jumping out to you.
Yeah, there was some selling in that stretch. It seemed like there was some like a mini boycott going on over certain issues about the content there. I don't know if that's been resolved, but there was definitely selling there. The up-down ratio, if you go to a weekly chart, that's at a 1.0, which is okay. So it is interesting. The AD rating is a D minus. The slightly more timely AU up-down ratio is an okay one. But yeah, it's not the greatest. So that's something that is something to keep in mind. We haven't seen volume skyscrapers really since back when, early in the prior breakout, more like April, May or so. Since then, there have been a few volume spikes to the downside, but it has been calmer. So yeah, that is something to watch out for.
And we can see on the weekly chart here, trading tightly around this 10-week line, but definitely looking for support there. And the RS rating, Ed, was doing really well, but seems to have faded here over the last couple months.
Anytime you have a stock that's pausing while the market has trended higher, that's tough. Yeah, the market is in the last week or so has paused, but so has Netflix. I mean, if Netflix had continued rallying, you could have seen this relative strength line really rebound. But yeah, so we've had a consolidation for a while. It's gone on for a while, and the market hasn't paused. So you're going to see deterioration there.
All right, Ed. Well, let's go ahead and move on to the next name on our list, which is GE Vernova. That company will report Q3 earnings on Wednesday, October 22nd. Earnings for the energy player, AI player as well, are expected to swing to a 171 profit versus a loss of 16 cents the previous year. And revenue is projected to rise 2.5% to $9.146 billion. And here's why we're watching GE Vernova. Guidance again will be key. Will it raise guidance like it did after Q2 earnings? We'll also be interested in updates on GE Vernova's natural gas turbine backlog and the potential for wind turbine losses. So at GE Vernova has been a high flyer here. That's thanks to the power generation business that's fueling the AI boom. Uh, but do you think Wall Street thinks that maybe the stock is getting a little too expensive? That's at least some of the commentary we heard from analysts at Rothschild this week, giving GE Vernova a downgrade ahead of upcoming earnings. So, what are your thoughts there? And what else are you looking at with GE Vernova?
Yeah, it's going to be interesting to see because this is sort of like powering the data centers. Is there a sense that is that a little overheated? I don't know. I mean, uh, you know, earnings tend to be lumpy, so it can be hard to know. I mean, GE Vernova has these big swings up and down sometimes on the earnings, so the backlog will be important. Yeah, I think that's going to be an open question. It's gone on a huge run. It doesn't have, and can that justify it? It is a pretty high valuation, uh, but that's a question for a lot of AI plays. So I think that this one will be watched for what they have to say about that. I mean, people talk about, oh, let's do these nuclear startups. But let's face it, nuclear power isn't really going to drive a lot of power for data centers for a while. So it's gas turbines. And so, presumably that's a huge business. So that backlog is what matters. Is there just an enormous backlog raising the guidance, proving the doubters wrong, in that situation. But yeah, we'll just see. There's been a lot of reasons why you should be bullish, and the market a little uncertain, so people start listening in the back of their heads a little bit more to the negative comments. We'll see if that carries over.
All right, well, let's carry over to the chart here, Ed. I'm on the daily still. This one in a stage two consolidation with a 677.29 buy point. It's about 11% to that official pivot point there, Ed. But, we can see a couple of downside reversals here in the last two trading days with, let's be honest, a quite volatile market. It's sitting right at the 600 level. But below the conjoined 21 and 50-day lines. So, what are you looking to see set up here with GE Vernova?
Yeah, this is not great action right now. I'm not sure because yes, on the prior, like very recently, it was getting above some short-term highs, the last few days, and then it downside reversal, an outside day, basically to the 50-day line, now decisively or clearly below the 50-day line. Yes, it's still in this base, and this could just churn around and come right back, but that's going to be tough. I mean, it would have to be the chart action looks like it needs more repair time. Doesn't mean it'll have to do that because they could say, "Hey, our earnings are great. Why are you worried?" And it's like, "Okay, sure." And it's like, but that is not particularly good action. I think it needs to get above the high from October 15th. See if it can do that at the very least. But it's going to be that is not good. But you see that that's sort of its nature. This stock does have a lot of gaps. It has gaps in this base. It has, like I said, it can make these big moves and sometimes to the downside. And given that the market is volatile right now. Now we'll see what happens by the time earnings come around. Maybe the market will have resolved itself to the upside or downside. But right now it's very choppy, prone to intraday swings, and that makes it a little even tougher for for a stock like GE Vernova, which tends to have some of that action on its own anyway.
Yeah, and you can see, RS line has been trending lower over the last couple weeks, and kind of the same story here. Accumulation distribution rating of a D plus, perhaps signaling low institutional support for GEV. But let's hop on over to the weekly, Ed, because as you mentioned, we can see with the earnings here, kind of swinging a little bit all over the place here in terms of earnings per share. Revenue growth slowing down a bit this year. But this again is one of the big names coming out that's going to power all these data centers that are essentially propping up the economy. Any thoughts here with the weekly chart?
Yeah, I mean, it's not great to be at the lows. It's not down that much, all told, because there was a strong start to the week. Uh, yeah, the growth has been slowing on the revenue side. Will that ramp up again? Presumably, you would think with the date, with this big backlog, they'd like to see, well, when is that going to turn around? The up down ratio, unlike with Netflix, that is negative. That's zero point 0.8. Below one, that's not a particularly good reading on that front. You can see on the volume there haven't really been any up weeks since near the top, since when it got near the top and then it sort of slowed down. That since then it hasn't. That's okay, so on a base a little bit, but it would have been nice to see some kind of some more volume in on support when it sort of found support a few weeks ago.
All right, Ed. Well, let's uh, keep our foot on the gas, or I guess I don't know if that really relates to Tesla, but Tesla is scheduled to report on Wednesday, October 22nd. The EV maker is expected to see Q3 earnings fall 25% to 54 cents per share, and revenue is expected to rise 4% to $26.215 billion. With more recent estimates looking optimistic, it wouldn't be surprising to see a significant earnings beat here. And here's why we're watching Tesla. We'll want to hear the timeline for removing safety drivers monitors from robo taxis. Elon Musk has said he expects that to happen before year end, but that seems maybe implausible technically and legally. So we'll want to hear thoughts there. We'll also want to hear any plans for expanding that ride hailing service. Again, Musk has said that robotaxis would cover half the population by year end. We'll want to know how many vehicles are actually in the fleet right now. And we'll also be keen on any sales guidance for Q4 and fiscal year 2026 and comments about an upcoming shareholder vote. So Tesla has really rallied here the past 3 months. Shares are up about 38%. The company reported record Q3 deliveries earlier this month. I think that was a welcome surprise for investors and perhaps seeing more strength in the China market than most people thought. But as our resident Tesla expert, what are your thoughts here heading into earnings?
Yeah, I am surprised at how low the earnings estimate for this quarter, because if you have record deliveries, we also had record storage deployed for energy, so that should be doing well. I mean, we don't know, there could be tariffs that are raising the costs, and I don't know the details. I'm trying to understand why, but if you have record deliveries, sales are higher than a year ago, and the sales are more in the US than usual because of that expiring tax credit. Well, the margins tend to be higher in the US than in, say, China. So a lot of things, and they cleared out inventory. All those things should be positive for margins. So you would think that there would be at least a one-off on earnings. Now, again, I don't know if that really matters ultimately because that was a one-off. Deliveries will probably fall somewhat in Q4. There's reasons why China should be stronger. Year end tends to be stronger for everyone, and there's some tax credits there that will expire at year end. So that should be strong. But still, it's really about the robotaxis. I mean, people will talk about, oh, yeah, this and that, but it's really the robotaxis. There's other things down the road, Optimus, but that's not near term. Elon Musk has touted, oh, it's going to happen. We're going to see robotaxis, presumably with safety drivers or monitors, in covering half the country's population by year end. That doesn't seem to mean there's some movement about here and there, like Phoenix and other places, but it doesn't seem like they're expanding that much, and there aren't many in the fleet. So that'll be an issue. When are they going to pull safety monitors drivers? I don't know how you do that legally, even if just for the sake of argument, the cars are ready to go unsupervised, which we haven't really seen that evidence. But so I don't know. I mean, you know, the stock has moved on those things with on the hopes that those things will be delivered. They'll presumably stay bullish on that. I don't know what, but it really can be the reaction. How, if the market wants to take things bullishly on it or not. I mean, I don't know. It makes it really difficult to know when you're basically hoping that a promise that has been made for 10 years, when he says it again, will it this particular time excite people or will it disappoint them? I mean, I don't know. I mean, I don't know. So so we'll see. Resident expert is as usual confused, but the earnings call will be very exciting, and there may be some prizes and some stuff, and they might say things that, well, we'll see if those actually develop. So that's another thing. They might say something really bullish. That's something from the Q3 2024 call. They said a lot of bullish things, which generally didn't happen. So I mean, but that in the short run, the market might more rally on that piece of news.
All right. Well, let's take a look at the daily chart. I don't think you're the only one confused about Tesla here, Ed, but let's look at the action because this one is extended from this buy point back here in mid-September. But if you take a longer view, it looks like it's maybe forming a bigger cup with handle base here. Maybe that 40.75 high there could be a buy point in that handle. So again, retaking this 21-day line here over the last couple weeks, but give me your thoughts here, Ed, because it seems like this may potentially be setting up some possible alternate entries for investors.
Yeah, I mean, the recent shakeout was pretty constructive, I think. I mean, it's not fun to experience that, to be in a stock like that, but it needed that because it was this huge base and it made a huge run. So it was great to see now it has a handle. It's not going to show up because this base is so deep that it's not going to show up as a base. So that's one reason. Another reason why it really needed a handle in that regard. So a bit of a shakeout. It's starting to tighten up a little bit. That was one issue. There's been a lot of volatility, but that's somewhat the market's fault. And because this is sell-off, this pullback had happened along with the market, the relative strength line hasn't really fallen there. I mean, it's obviously not at consolidation highs, but it's definitely trended up over recent months. So that's a positive. Yeah, you have this downtrend there. I think on earnings, if it got above that downtrend, you could probably buy or add shares there again, but on earnings and definitely not right at earnings. I'd wait for that earnings call for sure, because that's where the movement will likely be. But that seems to be where it would go because especially if it tightens up. If you could trade sort of in the last few days in that range, hold the 21-day line, just tighten up, that would also be really, I think that would be really encouraging from a technical standpoint.
And I'm just going to switch over here to the weekly, and you can see, some losses here over the last year, but looks like that will be turning around in 2026, Ed. But again, any thoughts here with the fundamentals or technical action on the weekly chart?
Yeah, I find that analysts for Tesla are extremely lazy and just don't like to bother to update things. I suspect that Q3 earnings, because of the one-off things, should be pretty strong and will be better than expected. But I don't know why. One reason why there's a bounce is they haven't cut the estimates enough for 2025. They've been cutting all year for 2026. There might be here and there an upgrade. I don't know what drives it. I mean, there is the new cheaper model, but if they don't get self-driving, I'm not exactly clear. Well, why should sales be up next year? I mean, I don't, like energy is just not big enough. US sales almost certainly would be down next year because of the tax credits being away. That's allowed to be the true for all EVs. I mean, the EVs in China and Europe, more competition, while the Tesla's vehicles are a year older. I mean, I don't know why you would think there's going to be a big bounce in that. So I don't know. So that I would just keep that in mind. The pattern has been for analysts to cut estimates, but years out, there's enormous estimates. And then as those years come in, they start cutting those. I have deep cynicism about Tesla analysts in general. I feel like they're lazy now about Q3 and they're lazy about 2026. So I'm not sure what would drive that, but yeah. Again, it's more of a technical thing. The setup looks pretty good for Tesla on a technical basis.
All right, Ed. Well, those were some of the big names on our radar, but of course, there's always more to cover. So let's take a look at a couple of defense names, starting with GE Aerospace. That company is scheduled to report on October 21st. I'll switch back to the daily here. This one sitting around the 300 level here, Ed, above the 21-day line. So thoughts here. This one's looking in pretty good shape.
Yeah, it really is. It's just consolidating nicely. 21-day line, relative strength line at highs. I think this could be definitely an add-on buy point after earnings. You know, if it gets above, say, the recent highs or the all-time highs, either way, uh, and it could take a new position if you want as well. Again, with a positive reaction to earnings, it just comes down to that. The growth has been pretty good. There's pretty strong demand for jets and so on. So like GE is doing well here.
All right. Well, let's take a look at RTX, formerly known as Raytheon, also due on October 21st. And this one here, sitting below the 50-day line after some pretty ugly sell offs here back in early October. But thoughts here. It seems like that resistance level would be the one to get back above.
Yeah, I'm not really liking the chart. It's tested the 50-day line a couple of times. I sort of feel like it needs to base out. We often say the first or second test of the 50-day, 10-week line after a breakout is where you can add shares. So I'm not sure here. I don't know why it's sold off. Maybe because on its military side, maybe rare earths are an issue for them because there are some issues for some of that. But I don't know. Obviously, that's done well, but it just hasn't consolidated the way GE has, even though both, even though this has gone on a solid run. So it's not one to ignore, but I don't really like the chart action.
All right. Well, we did talk about GE Vernova, but we also have another AI power generator with Amphenol. This one has been talked about a lot here recently, Ed, on IBD Live. Rebounded above the 21-day line this week and has moved higher. You know, again, it's looking almost extended here, but thoughts on how investors might be able to catch this one?
Yeah, I think there was sort of a chance of, this week. So this was a 3 weeks tight, I believe, and it bounced off the 21-day line. So either way, you could have done something relative strength line at highs, but earnings are right around the corner. So that makes it really tough. Maybe you could have, if you had an add-on entry, you could say, I'll add a few more and just risk it into earnings because I have a big gain. But otherwise, it just seems sort of risky heading into earnings. But otherwise, I mean, it looks great. It looks great. Definitely getting that AI boost. A lot of reasons to like this name.
All right, and that one is reporting on October 22nd. Let's keep going with the digital infrastructure theme with Vertiv Holdings. This one due on October 22nd as well. And another one, Ed, here broke out on October 1st, hitting that 20% profit taking zone. But looks like it's maybe trying to digest those gains right now.
Yeah, and it ran up pretty quickly. So if it runs up quickly, sometimes say, well, I'll try to hold, you can say I'm going to hold it, sort of like the 8 week hold rule, which is more of a guideline than a rule. So it depends on where you got it. Look, this is a breakout that's worked. Some of the more recent breakouts have not worked, but this happened maybe just early enough that it's worked. It might have been, obviously if it broke out a few days ago, we'd be going, oh, I don't know. So the timing is really good, but it's acting very well. The growth, picked up on the revenue side, strong growth seen. This is one of those that you're going to want to look at as one of those, like along with GE Vernova, is one of those early AI infrastructure play reports.
All right, well, let's take a look at Intel, Ed. That company making waves after the Trump administration purchased a stake in the U.S. chip maker. Earnings there on October 23rd. And we're still on the daily here, Ed. This one breaking out of this long consolidation back here on September 18th. It ran up about 40%, but again, looking like it's trying to hold support at its short term moving average here.
Yeah, I mean, maybe you could do an add-on entry if it does something. I'd like to see a base at this point. It made a big, big run. It's going to be interesting to see how their current business is. I assume that's still pretty lousy. Is all this news is about the future, and is the Trump news, and maybe is that going to draw in more orders? Like Nvidia, Nvidia and AMD feel compelled to do stuff? Well, they are working. Nvidia's invested in Intel. AMD is going to do some work with Intel, like do some things. So Will that all pay off, and can they deliver it? So, but it's made a big run on those hopes. I think I'd like to see the market digest that and set up again.
Right. Well, let's hop on over to United Rentals. That's ticker URI. Earnings due on October 22nd. And again, another one running up here, Ed, above this 1,000 level, but broke out back here in July. It's had a nice rally. But yes, another one retaking the 21-day line here this week and looking pretty strong.
Yeah, it's sort of short consolidation, 3 weeks tight. A couple weeks ago, it fell back, but it found support at the 21-day line and the 10-week line. So I think it sort of did have a buying opportunity, but now it's, 6% above the 10-week line heading into earnings. So it just feels, I mean, earnings are coming. So I think it's just sort of like maybe there'll be an opportunity after earnings, but it's also, if it does well, it could easily be extended. So it seems like one of those that it might have left the station, and either it's going to come crashing back into the station, or it'll be gone.
All right. How about we wrap with Cleveland Cliffs, the steel producer scheduled for earnings on October 20th. Let me switch back to the daily here, Ed. But again, another one broke out of a base here on September 15th, sold off, tested that 21-day line, but then took off. It hit that profit taking zone, but again, looks like it's trying to maybe consolidate some of these gains here at the $14 level.
Even for steel makers, Cleveland Cliffs is extremely gleeful about steel tariffs, and they are not shy about it. And they've also talked about, hey, basically, you have no choice but to buy our steel, and we're open to selling out part of the company. I mean, to selling off. I mean, they're taking advantage of that. So presumably, they're expecting. Look, I mean, their prices are way up because imported steel is now 50% more. So steel prices at home are much higher. I mean, so presumably we're going to see, I guess let's take a look at a weekly, see how that goes. So, they've had losses, it hasn't done well. Well, that's probably going to turn around. I mean, they're going to pass the costs on to other folks, but we're going to see the revenue supposedly pick up, and then it's going to supposedly turn into profitability. Let's see how that goes. I mean, let's see how that's working with things. Obviously, just a huge tariff trade. I mean, this is one of the favored companies out there. It just makes it tricky because we're looking around there on how that goes, and then if see if demand holds up, because that's there is some current manufacturing pressure. Now you could argue, well, maybe long term, other companies will reshore more manufacturing, and that will keep steel demand high. But with 50% tariffs, a lot of other companies might say, well, I'll just make it overseas and import it with the tariffs. So I don't know, but if none of that, it's an artificial, it basically a huge price increase for Cleveland Cliffs, and we'll probably start seeing that pay off, going forward. But it's extended right now, so I'm not sure what you do with it.
Yeah, and you can see all the volume coming in here at over that run, and accumulation distribution rating of A plus, signaling institutional support. So definitely one to keep an eye on. Well, Ed, thanks so much for your insights today. We really appreciate it. And that wraps it up for this installment of Earnings Cheat Sheet. If you want even more market analysis, you can tune into Stock Market Today. That goes live after the closing bell. And thank you so much for watching, and we'll see you next week.